probably more taxes.
Well, let's bring in Tan Bu, CEO of Fund Management and Investment Advisor of Capital Dynamics, joining us here on set. Bu, thanks so much for joining us.
Thank you.
So is this kind of the new normal now? Low returns, high vol, a new regime that we're seeing?
Investment has always been like that. It's always been a period of high return, low risk, and alternate with low return, high risk.
Yeah.
So the phase where we have low risk, high return, that phase is over. We are now in
no return and high risk.
Yeah,
or negative return and high risk.
Yeah.
How about that? That's what we're getting at the moment, let's face it.
I mean, the theory that they teach you in school where high risk equals high return, that only lasts for a certain phase because they were alternate. And we are now in a high risk, low return era.
What would you blame for this recent sell-off? Is it more about the trade tensions, do you think? Is it Apple? Is it the tech sector that, we're seeing these unwind of these very extreme positions?
It's all of the above. It's a convergence. But if you really want to find a scapegoat, I think Trump would love me saying it. It would be Jerome Powell, where I think it was early October, 3rd or 2nd October, where he said that the U.S. interest rates are still far from neutral. That was one of the triggers.
And we're seeing this tug of war basically unfold between the market and what the Fed is suggesting. I mean, markets are now pricing in only a 35% chance that we'll see 2 hikes at the current level right now. So that basically means we'll see the hike in December and possibly one more in 2019.
Yep.
Is that misplaced in your eyes?
I mean, the dot plot is still 1 this year and 3 next year from the Federal Reserve, right? So we have to wait until December to see the latest dot plot. But look, eventually you got to look at the economic data. And when wages rise, they don't rise 1 month and fall the other month. Wages move in trends. And U.S. wages have been growing. I mean, if you look at over 6, 12, 18 months period, the trend is up. Over the next couple of months, I don't see the U.S. job market suddenly disappearing, right? Job market in U.S. is going to remain tight. You hear a lot of reports where in many industries you have no workers, or you got to give very good signing off packages before they come on board. And unemployment remains at 3.7%. That momentum is not going to disappear within 1 or 2 quarters.
Bu, what about inflation? Many people sitting there think that it's being underrepresented in their thinking and underreported, and people are far too relaxed about it. What's your view?
I would tend to agree with that, especially if you look at the U.S. Consumer Price Index and the core CPI, and you break it into 2, there are 2 major components. One would be the services, and the other would be the prices of goods. The component that's been holding the core CPI down has been the prices of goods. Prices of services have been rising almost perpetually. Now, the prices of goods have been reversing. They were negative, they're now at 0. That is before the impact of tariffs, before the impact of the tight labor market. If you look at it, say 6 months, 9 months from now, assuming that the tariffs stay where they are, there's going to be some impact, certainly, right? Now, if it goes to full 100% imports, the impact is going to be even larger. And all this is with the US dollar pretty strong. But should the US, which seems to be peaking, our view is that US dollar should peak next year, you're going to get extra input, inflationary input from the weakening US dollar.
Bu Haslinda, in Singapore, it does seem like there is some upside, at least for the Chinese market, and perhaps time to relook at China.
I would certainly agree with that. I think if you want to have a really contrary call, look at the Chinese markets. Not just because it's contrarian, but because the valuations are really too attractive to ignore.
Tan, I've got to leave it there. Bu there, I should say. Tan Bu from Capital Dynamics joining us here in Hong Kong.
Yeah, looking forward to the resumption of trading over there in Tokyo.